Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news Northern Hemisphere holidaymakers are returning to an economic situation that is far from upbeat for most, and the storms in the US and China are not the issue. Firstly, American retail sales recorded their smallest gain in 6 months in August as consumers cut back on the purchase of cars and clothing. Although that was below market estimates, it was 6.6% higher than the same month a year ago. And we should note there were upward revisions to July data. Essentially, this data doesn't change economic growth expectations in the third quarter, even with its weak car sales component. A key measure of industrial production and capacity utilisation came in at modest levels and about what was expected. And interestingly, August imports at the two huge Los Angeles seaports were down 3.1% at a time they normally grow. This does suggest that some of the tariff front-running may have peaked. But in a widely reported index of consumer sentiment, it came in higher than expected, staying at the same level it's been, the same track it's been on since 2009. Earlier, the pinch of sanctions and more general emerging market squeeze, Russia has moved to defend its currency, raising official interest rates by 25 basis points to 7.5%. It was their first rate hike in 4 years. Indonesia is also feeling the pressure. It reported to be delaying infrastructure projects and the debt they require to reduce its vulnerability to international currency stresses they are now facing. There are widespread reports that the American president has ordered staff to proceed with a second set of tariffs on China, covering about $200 billion worth of trade. And this sort of undermines the Treasury Secretary's attempt to restart trade talks with China. And China is quickly adjusting its own rejection of US imports. In China, new data has revealed signs of softness as the pace of investment has slowed to a new low for them. Stable figures for retail sales growth and industrial production have done little to ease concerns of a cooling in their economy. But property prices in China rose at the fastest pace in almost 2 years in August. US Treasury 10-year yield is higher today at just on 3%. That's 15 basis points higher over the past week. Their 210 curve is at 21 basis points. That's 3 basis points lower in the week. The Aussie government 10-year is at 2.60%, down 1 basis point. The Chinese government 10-year is at 3.68%. That's up 3 basis points. While the New Zealand government 10-year is at 2.58%, unchanged. And New Zealand swap rates have changed very little over the past week, or even over the past 2 weeks. And gold is weaker, and now just on $1,193 an ounce in New York. That's down $8 and lower than the level we started at last week. US oil prices are little changed at just under $69 a barrel. The Brent benchmark is just over $78 a barrel, and the US rig count moved up last week. And the Kiwi dollar is starting the week slightly softer at 65.5 US cents. That is little changed on the week. But the cross rates were marginally softer too at 91.5 Aussie cents and softer at 56.3 euro cents. That puts the TWI at 69.3, exactly where it was 7 days ago. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.